Here's a summary of Unilever's 2025 Q3 earnings call transcript, designed for clear and concise reading. Introduction and key performance highlights. Unilever delivered a solid third quarter for 2025, with underlying sales growth of 4%. A key highlight was the acceleration of volume growth to 1.7% for the total company, excluding ice cream. This growth was broad-based across all business groups, with each achieving over 3% underlying sales growth. This performance keeps Unilever on track to meet its full-year outlook, driven by strong innovation, improved execution, and a strategic shift towards premium segments and fast-growing channels. Financial metrics and performance breakdown. Underlying sales growth, 3.9% for the quarter. Excluding ice cream, this rose to 4%. Underlying price growth, 2.4%. Volume growth, 1.5% for the quarter. Excluding ice cream, volume grew by 1.7%, an acceleration from the previous quarter's 1.1%. The two-year compounded annual volume growth rate for the company, excluding ice cream, is 2.4%. Power brands. These, representing over 75% of turnover, grew 4.4%, including 1.7% from volume. Excluding ice cream, power brands delivered 2.2% volume growth, aligning with medium-term ambitions. Notable performers included double-digit growth from Vaseline, Liquid IV, Nutrafol, CIF, and Domestos. Turnover. Reported turnover was €14.7 billion, down 3.5% year-on-year, impacted by a significant negative currency impact of 6.1%. Geographic performance. Developed markets continued to perform strongly. North America saw robust underlying sales growth of 5.5% with 5.4% from volume. This marks the fifth consecutive quarter of strong volume-led growth, driven by personal care and well-being, and improved prestige beauty performance. Europe achieved competitive underlying sales growth of 1.1%, despite a strong comparator. The business structure in Europe continues to improve. Emerging markets showed an increase in growth, with 4.1% underlying sales growth. Asia-Pacific Africa delivered a clear acceleration with 6.8% underlying sales growth, 3.5% volume, 3.1% price. Indonesia returned to growth, and China saw low single-digit growth amidst a subdued market. India, while the macro environment is favorable, Q3 sales were temporarily impacted by goods and services tax reforms, with trade destocking and consumer delays anticipated to normalize from November onwards. Latin America experienced a decline of 2.5% in underlying sales due to broad-based market softening and macroeconomic pressures. Volume declined by 7.3%, partly offset by price increases. Business group performance. Beauty and well-being. Underlying sales grew 5.1%, 2.3% volume, 2.7% price, with a strong two-year CAGR of 4% in volume. Double-digit volume growth was seen from brands like Dove Hair, Vaseline, Hourglass, K18, Liquid IV, and Nutrafol. Personal care. Underlying sales grew 4.1%, 1% volume, 3.1% price. Growth was supported by Asia-Pacific, Africa, and North America. Premium innovations in deodorants and skin cleansing were key drivers. Home care. Underlying sales grew 3.1%, 2.5% volume, 0.6% price. Volume growth stepped up, particularly in Europe and Asia-Pacific Africa. CIF and Domestos delivered double-digit performances. Foods delivered growth ahead of the market with 3.4% underlying sales, 1.3% volume, 2.1% price. Hellmann's showed strong momentum with mid-single-digit growth, particularly in Brazil. Ice cream. Underlying sales grew 3.7%, flat volume, 3.7% price. The business is preparing for a demerger, with completion expected in 2025. Ice cream demerger update: the demerger of the ice cream business is on track for completion in 2025, although the timeline has been revised due to the U.S. government shutdown impacting SEC work. Shareholders will receive 1 share in the new ice cream company for every 5 Unilever shares held. Unilever is committed to paying the Q4 dividend in full. Management forecasts and future outlook: full-year outlook, unchanged, within the 3% to 5% multi-year range for underlying sales growth, both including and excluding ice cream. Second half performance, expected to be ahead of the first half, with continued outperformance in developed markets and improved performance in emerging markets. Volume growth, Q4 expected to be at least in line with Q3. Profitability, continued expectation for an improvement in underlying operating margin for the full year. Second half margins are projected to be at least 18.5%, or 19.5% excluding ice cream. 2026 outlook, confidence in continued outperformance. The company expects 2% market volume growth to be achievable long-term in Latin America, although currently closer to 1%. Significant risk factors: uncertain external environment. The company continues to monitor external events closely. Macroeconomic pressures, particularly in Latin America, affecting category growth and consumer demand. U.S. government shutdown impacted the timeline for the ice cream demerger. Commodity price volatility. While some costs are benign, palm oil prices are increasing significantly. Wage inflation, significant in Europe and the U.S. currency fluctuations. Adverse currency impact on full-year turnover is expected to be around 6%. CEO and CFO statements: Fernando, CEO, emphasized a good quarter, with broad-based growth and acceleration in volume, keeping Unilever on track for its full-year outlook. Highlighted the powerful innovation, improved execution, and significant shift into premium segments and fast-growing channels as key drivers. Expressed confidence in Unilever becoming a true marketing and sales machine, and reaffirmed strategic priorities. Noted strong performance in anchor markets like the U.S., with 5 consecutive quarters of volume-led growth. Stressed that the portfolio is stronger with a greater focus on beauty, well-being, and personal care, and that the shift to premium and digital commerce is accelerating. Acknowledged lessons learned in Latin America, assuring they will not be repeated. Expressed confidence in outperforming markets and delivering hard currency earnings growth. Srini Phatak, CFO, detailed the financial performance, confirming underlying sales growth of 3.9%, with a contribution of 1.5% from volume. Provided a more granular view of volume and price contributions across business groups and geographies. Addressed pricing, noting that while commodity costs are benign in some areas, palm oil and wage inflation necessitate sensible pricing strategies. Explained that net material costs, including forex devaluation, are expected to be around €0.5 billion for the year. Highlighted the importance of price and mix in beauty, driven by premium innovations. Detailed the progress in productivity programs, supply chain reshaping, and overhead cost reduction as drivers for margin improvement. Reiterated the focus on hard currency earnings as a multi-year objective. Confirmed that the demerger timeline is subject to SEC clearance, but remains committed to a 2025 completion. Key takeaways and lowlights: implicit positives, strong underlying sales growth, accelerating volume growth, excluding ice cream, broad-based performance across business groups, robust developed market performance, especially North America, improving emerging market trends, successful premiumization and innovation. Areas for improvement/challenges: softness in Latin America due to macroeconomic pressures, temporary impact of GST reforms in India, flat volume in ice cream, negative volume growth in Europe against a tough comparator, though share gains are positive, and the ongoing complexity of the ice cream demerger timeline. The delisting of certain hair care brands in the U.S. also presented a headwind. This summary provides a comprehensive overview of Unilever's 2025 Q3 trading statement, covering key financial highlights, management perspectives, future outlook, and significant considerations for investors.